We became the largest distributor of mobile games in Southeast Asia. Signed a term sheet, started to do due diligence, looked at how we're going to integrate everything. It was very exciting, you know. And then the financial crisis hit in 2008. Okay. At which point their funding died, and so they cut off our funding.
Welcome to Global Perspective. I am Mteria, and today we are going to talk about building startups, selling startups, and negotiation, because we are now with the serial entrepreneur with 3 exits. He is also a godfather of MTV Asia and also right now a coach of startup founders, Paul Meyers.
Hello.
Hi.
Thanks for having me.
Good morning,
Good
Paul.
morning. How are you doing, Em?
I'm doing well.
Good.
What about you?
I'm good. I'm good.
So please introduce yourself to our audience.
Okay. Well, Em gave you the overview. I'm an American. I've lived in Asia over 30 years now, most of it in Singapore. About 2 years ago, exactly 2 years ago, in fact, I moved to Bangkok. I started, 6 or 7 companies while in Asia, exited 3 of them, 2 of them kind of train wrecks, and 1 of them turned into a zombie, which is pretty much par for the course, I think. I've worked as a EIR for a very large venture firm called Orbit, and then I also ran an accelerator for Telstra, a regional accelerator in Asia, Telstra being the Australian telco, called Murudi. And finally, before COVID, I also helped Asia Development Bank set up their venture fund for emerging markets in terms of climate and climate change.
Sounds good. But your training is actually in documentaries and film. So how did you become a startup founder who has 3 exits?
Well, yes, I trained in documentary many moons ago, documentary film, and at that point when I graduated college, which was a while ago, obviously, there wasn't very much of a market for documentary film. So I worked in Washington, D.C. for the government for a while, and then I moved to the Bay Area, San Francisco, and started doing corporate work, marketing films for a lot of the tech companies in the Valley, Apple and HP and IBM, and then a lot that aren't around any longer. At a certain point, they started sending me to Asia to shoot documentaries and marketing programs for them, and I just fell in love with it. So I had a production company in San Francisco, and I raised some money, my very first money, and I expanded to Asia. And I looked at Hong Kong and Singapore was offering all sorts of sweeteners, so I drank the Kool-Aid and I moved to Singapore. And I was there pretty much ever since.
But you had 2 exits in NASDAQ, right? And another one has
later on. Okay, so then what happened was as I started working more interactive kinds of things, kids' educational CD-ROMs, and this started to interest me more than making marketing films about tech products.
Sure.
So I eventually worked for a company that set up an animation firm in Vietnam that made drawings and artwork for interactive CD-ROMs. If you remember educational CD-ROMs, like Magic School Bus and stuff like that. We were creating the artwork for that. After that, I moved to Singapore and I worked for Asia Business News, which is now what CNBC is. And I was head of multimedia. There was still no internet at that point, and created a product there for them that streamed television news to your computer without the internet.
Without the internet?
Yeah, it was as part of the broadcast signal.
Is it like satellite?
No, there was a part of the broadcast signal known as the vertical blanking interval, which is kind of where subtitles go and all that kind of stuff. And we were able to compress that information into that part of the broadcast signal. And then you could receive television news and be able to sort stories. And it was pretty cool on your computer. Again, pre-internet. When CNBC bought Asia Business News, they had a deal with Microsoft, so we all disappeared, and I know it's disappointing. And that project just floated away, which sometimes that's what happens. But what happened was at that point I helped start an internet company, and 4 of us over 2.5 years, 3 years, turned into 650 people around Asia, bringing Western media brands to the Asian internet space and localizing them. So CNET, if you remember CNET, MTV Asia, I started MTVAsia.com, E-Online, DoubleClick, a lot of different brands. And I learned how to raise money. That's where I learned how to raise money. So I raised about $60 million for that company over the years, going to venture capitalists, and helped set up 8 different countries where we did localization for the different products.
How much was the valuation at the time?
Gosh, I don't even recall. That was a long time ago. What happened was then we went public. We went public on NASDAQ, which was the whole goal because it was Internet 1.0, the whole boom. Unfortunately, we went out a little late, and we went public on what is still the second worst day in the history of NASDAQ, and the company didn't do very well after that. And so I lasted about 3 or 4 more months, and the company lasted about another year, but the bubble had burst and we were gone. So I took some time off, had a few kids, and then started another company which sold mobile games. At this point, mobile games was just very early on in the business, again, very early.
So you're not a developer of the mobile game, but
I was a distributor, exactly. And this is before iPhone and before the Google Play or any of those kinds of things. So if you remember old school Java phones, you get ringtones, you get screensavers, and all. I sold all that kind of stuff. But what I did was, my company was called Acme Mobile. I always wanted to have a company called Acme, like after Roadrunner and so. We became the largest distributor of mobile games in Southeast Asia. And I had billing connection with 17 carriers in Southeast Asia. Had a team, I had a bunch of people here in Thailand, had a bunch of people in Philippines, a team in Singapore, and people on the ground in Malaysia and Indonesia. And we became the big distributor of mobile games in the region. And they eventually sold that company to some Mexican investors and exited then during the financial crisis. It just became to the point where we couldn't raise money, so I sold it to these guys.
I'm going to ask you a little bit more about the game distributor company, because I heard that there is a struggle when you try to sell the company. Like previously it was a buyer, and then the financial crisis hit. And then I think our audience face a lot of struggles and challenges as well, and they don't know how to overcome, and they doubt whether they will be able to successful ever again.
Sure.
So I want you to talk a little bit in deep about the situation at that time, and how do you feel, and how did you overcome?
Okay, good question. So the backstory here is that after we built out Acme Mobile and we had distribution all over Southeast Asia, and some in India, and some in Japan, and some in Korea, we were ready to raise some money. So I went out hunting for money for $3 to $5 million, which wasn't that much at that point, but it was enough to make us profitable. So we were going to do that. And I found an investor in California actually who wanted to buy us. And it was another mobile content company, and they wanted exposure in Asia, and they said, okay, tell you what, we'll buy you for a very significant fund, a very significant amount of money. And since I was the majority shareholder, I thought, okay, let's do that. It wouldn't make me rich by today's standards, but it would have done very well for me. So we signed a term sheet and we went down that path. And they were backed by 2 very, very big, well-known Silicon Valley venture firms. So it looked like a good partner.
Like PayPal Mafia?
Not quite yet. There wasn't the PayPal Mafia per se. Maybe there was, but they weren't as well-known. But one of the old school DCM, Dixon Dahl Capital Management, which was one of the original VCs, the old school guys, and that's who these guys were backed by. So good heritage, good funding. Signed a term sheet, started to do due diligence, looked at how we're going to integrate everything. It was very exciting, And then the financial crisis hit in 2008. Okay. At which point their funding died, and so they cut off our funding as well. They said, we have to cancel the deal. And at that point, because I had an exclusivity deal with the buyer, I had stopped looking for money. So we ended up with about 45 people scattered around the region in my different offices, 2 months worth of runway, and a lot of people, a lot of payables and a lot of receivables. And it was very difficult. Nobody was investing in anything at that point. I remember how bad that was in 2008, 2009. It was really, all the stock market crashed in the U.S. and nobody was investing in everything. So tried to last for a while and went for about 8 or 9 months, and we unfortunately had to lay people off, and we cut ruthlessly all of the suppliers who weren't making us money and the distribution channels who were not making us money. We focused on the big boys, and that, at that point I was distributing, Electronic Arts and THQ and a lot of major brands. I was their face in Asia. So we've just focused on those kinds of things and automated as much as we could. We just tried to automate. But at the end of the day, we couldn't make it work. And the board and I decided to shut the company down. And then out of the blue, somebody called and said, "Hey, we're interested in buying the company."
Whoa.
Yeah. It was, woo. We negotiated with them, and he represented a company out of Mexico that was a mobile content distributor that was very strong throughout South America and Central America. Okay, but they were based in Mexico, and eventually they did buy the company. I did not make very much money, but I paid off all my creditors, made sure that all of the people who had lent us money got paid back, all of my suppliers got paid, and that was very important. I, however, had put 7 years into the company and spent a lot of my own money, and did not make, I made like $18,000 or something, some very small amount of money.
Okay.
At the same point, my marriage was kind of dissolving, and I was the dad of 3 young children. So within a few months, I was a single dad with 3 young kids, and no job and no real source of income, but also no identity. What happened here was that, and I think this happens for many people, you become part of the company, especially after 7 years of being the founder. Your identity is that company, and I was Acme Mobile, and so all of a sudden I didn't have Acme Mobile anymore.
Like you don't have a surname anymore.
Right, exactly. And also I think the same thing happens when you get divorced or separated. You're part of the couple unit and then you're not, right? And so I think everybody goes through, it's not dissimilar, getting divorced and also having your company go away, right? So it was kind of a bleak time for me. It was really hard, and I had 3 young kids. I'm a single dad, and
and the kids stay with you?
Yeah.
Oh.
So I'm like, poor Paul, very worried, and I was. I was pretty scared about what was going to happen and who I was, and not feeling very stable. And incredibly, what happened was a friend asked me to go with her on a Saturday to volunteer to help mentally disabled kids learn how to swim. And then I spent 3 or 4 hours doing that one Saturday, and I came away feeling, wow, I was like, that was the best thing. And I really felt like, wait a minute, here is a path forwards. And the path forwards for me was not worrying about me, but helping other people and helping to volunteer. So I helped with the swimming, I helped teach people how to read, I helped do like soup kitchen kinds of things in Singapore. And it really helped me regain a lot of my self-knowledge and self-respect, okay? And so one of the things when I coach people and I talk about mental health and mental wellness quite a bit, one of the things I recommend is volunteering. Stop thinking about yourself, start thinking about that, and maybe it's the universe, maybe it's good karma, maybe it's just how things work, but helping other people and volunteering is a really good way to kind of rebalance the scale and help you internally remember who you are.
So you feel like you regain self-esteem and self-respect again when you are beneficial to others?
Eventually, yes, it was.
Okay, but you still don't have a job and you still don't have a surname.
Correct. So, excuse me. So I then started doing a number of different jobs. I worked for Vodafone for a while. I set up another production company that did offshore software development. So I produced mobile apps for different companies, Microsoft and ESPN and a bunch of other brands. Did some things for BlackBerry. Remember BlackBerry?
Yeah, of
okay.
course.
And then eventually, I kept things going, but I was taking care of my kids, and I kind of stepped out of the real hardcore founder situation because it demanded so much time, and I wanted to focus on raising my kids. So, in general, I did that. I was invited then to become the entrepreneur in residence for what at that point was called the China Accelerator, okay, and for Southeast Asia, and that's part of a larger venture capital fund. And I did that, and that was good, and that kind of got me back into the groove. And then I was hired by Telstra to run their accelerator program in Southeast Asia called Murudi.
Murudi, yeah.
And that got me really back in the groove. So helping early stage startups across Asia learn how to be startups and get funding, and reintroduced me to the venture community, which from when I was raising money before had now evolved, especially in Singapore, into an entirely different thing. So that was really good for me. One of the companies became one of the very early unicorns in Bangladesh, actually. And we started with 2 or 3 people coming to our accelerator.
Wow.
And became a unicorn in Bangladesh, which I remain very proud of, yeah.
Are you board of director of that company?
No, and nor did I invest in any of those companies, no. But I'm still in contact and still, still friends with those guys, so, and very proud of them. I mean, they've done awesome work. So that ended. Telstra decided to shut us down. Unfortunately, we were arguably the best early stage accelerator in Southeast Asia at that point. And unfortunately, Telstra was having money problems, and they thought, shouldn't be doing this.
I think that is tough. You know, need to accelerate, right? Do you?
Yeah.
I was like batch 6.
Oh, okay. Yeah.
And need to accelerate was like the best accelerator
Exactly.
in Thailand, and then
Boop, they pulled the plug.
it's gone.
And that's one of the issues with corporate accelerators, and it still is, why you don't see very many now. And there are a couple now in Thailand, which is great to see that again. But it takes a lot of vision and a lot of courage from the mothership, from the corporate, to say, okay, we're going to let this run 6 or 7 or 10 years or however till we start getting money back.
Yeah.
Right? And that's a lot of companies couldn't do it or wouldn't do it or didn't see the value in doing it. I think accelerators now are very different animals, corporate accelerators. The corporates understand what the startups can or cannot do in order to help them. But that was a while ago, so that kind of ended.
Because you are a coach of startup founders right now, have you seen any startup founders who decided to give up entrepreneurship and then go back to corporate life?
Sure, many. So the statistics tell us that eventually 9 out of 10 startups fail. Right. So you have a 10% success rate, which means you have a 90% failure rate. And it's hard. Being a founder is difficult, and I think anybody who has started a company and gone the venture route and tried to raise money, I salute them, because it's really, really difficult. And we all know how that is. I'm a glutton for punishment, and I went back time and time again to do it. But I think that it's hard for many people, and if you have a family or commitments or realize it isn't what you want, then of course you go back to a corporate job or something like that. Very few. One of the statistics, though, I think 60% of founders go back again to start other companies. Okay?
Like after going back to corporate and then resign again?
Or just like they sign up to, I got another idea, let me go for this again. So actually a pretty high number of people do it, but eventually the attrition and the numbers work out so that, people just go back to being corporates. I had a dentist actually who decided to start a company. He stopped being a dentist. He was my dentist and he stopped doing it. And then after about a year and a half, he became a dentist again. Because
you didn't coach him.
Well, this is before I was a coach, right? But yeah, I would have said, don't do it. I don't think it's a good idea. But people do go back, and let's applaud them for giving it a try, because it's a big leap, and it's hard work. And if you look at how long it takes to exit on average, you need to be willing to sign up for 5, 6, 7, 10 years, right? In order to exit. And can you do that? Can your family do that? Can your partner do that? Because it involves all of those things. It's not just you or me. It's, you have this whole village, right? And it's also the people who work for you. Eventually, you have the vision and you have the passion. But if I hire you, you may not have that same vision and passion because it's not yours, right?
Yeah.
And I can only ask you to work for a smaller salary for so long without starting to see some upside for employees, and that's a real struggle for startups nowadays, right?
You never know whether the shares that you're holding is going to worth or not.
It's a gamble. It's a gamble. And my first time out with the internet company, nobody really anticipated that the bubble would burst. Or we all sort of knew it would, but we were in denial, but we didn't think it would happen the week that we went public.
Of course,
right?
Yeah.
And then the second time, I didn't understand that there would be a financial crisis, during the time that our company was being bought. I thought, okay, cool, I'm going to make this money. Everything's good.
Yeah.
And then boom, global financial crisis hit. So there are all sorts of things that happen that can just change how your company works, right? I mean, today, on the 2nd of April, yesterday in the U.S., the U.S. government, Donald Trump,
announced the tariff?
Right, all these tariffs, which means that a lot of companies have to rethink their businesses on a big scale.
Yeah.
So maybe if you're Boeing or Ford or Apple or a big company, you've been preparing for this. But if you're a mid-size or small startup and you're selling things one way or the other, or you're relying on hardware being a certain price point, you have to rethink your business right away. You could be in trouble, right? I was talking to another investor today about Series B companies in the States. Like, a lot of their hardware or their sales happen internationally. It's going to get really difficult now, right? Their whole business may be threatened.
Wow. So the business world is like becoming more dynamic. It changes fast due to geopolitics and technology and generative AI.
Yes.
And
yes. And so you can have a great company and you can have a great team and you can have a great customer set, but there are outside forces. And I don't mean like acts of God. I mean just the economy changes, or there's a 911, or any kinds of those things, which just changes the playing field that you have no control over. So in addition to it being hard and having competition and all, trying to raise money and building great products, you have these kind of things that can come in and challenge you. So upshot is that it's difficult to be a founder, right?
It is.
Right.
It is difficult to be a founder, and founders also fight with their co-founders and fight with their spouses,
yes.
as you mentioned before
yes.
in other podcasts.
Yes.
And I'd like to ask a little bit more about the fight with the co-founders thing, because that's like, I think it's the majority of the failure of startups contributed by this type of conflict.
Okay,
Is
sure.
it true?
I'm not sure that the majority of startups fail because of that, but I do know that it's a problem and it's an issue, and it's not right away necessarily, but it's 2 or 3 or 4 years down the pike when you're slogging away, and it's like it becomes apparent that founders have different goals, or their goals change, right? Like all of a sudden, I have 2 kids, and then when we started the company, I wasn't even married. My home needs and my personal needs are going to be different, right? So I call them my greatest hits as a coach. My greatest hits. The 2 biggest issues that I deal with are, one, I hate my co-founder, and then the other one is my partner, my spouse or my partner wants to throw me out the window because I'm never around. I'm working too hard, right? Those are really big issues. On the co-founder side, some of it comes, in my experience, some of it comes down to communication, right? If your co-founder is a technical co-founder, a software engineer, let's say, and you come from a marketing background or a sales background, how you communicate, very, very different.
Right.
What you say and what you don't say, and what your assumptions are, and just how you operate, your OS is very different. So a lot of the problems between co-founders can be taken to communication. That maybe you want the same things, but you communicate differently. So when problems come up, it seems like you're at odds, or actually you're not at odds, but you can't communicate well. So I work a lot on that, sometimes with single co-founders and sometimes as co-founders together, right? Like couples counseling almost, right? And that helps a lot, but not all the time. I mean, in some instances, things have gotten so bad, or people have just changed to the point that they just want out. Negotiating that out and negotiating what that separation looks like, and especially if there's money on the table or shares on the table, can get really difficult and ugly. And sometimes go beyond a coach, or sometimes go beyond the board. A good board will help with that, but sometimes it gets into legal stuff, and you need lawyers, and it gets messy.
So if a co-founder has a different direction, because companies have to pivot, right? There are a lot of times that we have to change the business model. So the direction is not as we set out to do. It's not like why I started this company in the first place. So we need to part our ways. Then what is your, I don't know, techniques or tips and tricks, or how to negotiate with a co-founder that is going to be good for both of them? I wouldn't call it win-win, because I'm not sure whether there is a win-win.
No, I'm not sure it's a win-win. Obviously, you try to get a win-win. But yeah, I mean, as companies pivot, or the market changes, and all of a sudden you find that you're working 70-hour weeks on something that you didn't really sign up for and you don't love, right? I mean, you have to have a passion and a vision in order to start a company and to be a founder. And that's probably the single most important thing, and the single biggest contributor to success. And I think most venture backers and investors will say the same thing, that founders need to have a vision and a passion, right? But if your target changes and you're doing something else that you don't like, you no longer have the passion for, then you want to step out after a while, right? That's a little easier than if we have personality issues. Personality issues,
it's easier than personality issues?
Yeah, absolutely. Because personality issues, it becomes like a real struggle, and I want to win and you want to win. Whereas if the things have changed and you can't do it anymore, I mean, usually there's a way to negotiate an out that is comfortable for both parties. It may not be totally. Negotiations, I don't think winning in negotiations and getting what you want in negotiations, I don't believe it's kind of the goal. You want to try to get to a point, whether it's this, or whether it's a divorce, or whether you're negotiating over the price of a car, something that's satisfying to both people. It's not winning or getting what you want, but getting somewhere that's hopefully equitable and hopefully acceptable to both parties, right? And that's really what I go for, not necessarily winning or getting what you want. Yeah.
So maybe the founder needs to consult legal like legal advisor?
If it gets bad, I mean, if you're in a company, yes, you need to have a lawyer come in if your co-founder wants to leave. Obviously, there's legal considerations and shareholders and shareholder agreements and directors. And yeah, there is some legal aspect to it. But you don't want to get to a point that I'm going to get a lawyer to sue you or to engineer me exiting, because that gets messy and expensive and unpleasant. And then it's not a win-win. Then it's like a lose-lose. You want to try to avoid that, in my opinion. And there are times, I mean, I've had a couple of instances where I went down the path thinking, okay, I'm going to start this company with this guy. And 6 or 8 months later, we both realized it's not going to work. And then we need to separate. What does that separation look like? And in both instances, it involves some money and some IP and some time and some ill feelings, but the ill feelings disappeared over a while. But we made sure that it was clean and clear, and you did this and I did this, and you go this way and I'll go that way, and you have that IP and I have this IP, and okay, you're able to do it. But not all founders are that fortunate.
Right. So let's move on to talk about negotiation a little bit more, but
Sure.
not about the founders, but with the investors. How do you negotiate with investors, and how do you know whether they're not going to do the hostile takeover if you don't, like if you're not willing to sell the company to them?
Oh gosh, we could talk for hours on this. So for early stage founders, okay, seed money, pre-seed, I advise to go with a safe note or some sort of convertible investment, so you don't have to figure out a valuation, okay? Safe notes allow you to do that in the early stages, and then essentially the investors can invest at a discounted rate to the valuation that comes downstream, okay? But it's pretty good for everybody up to a point, all right? After that, it's really important for founders to understand their dilution, number one, how much they get diluted, and also their rights as founders and what the shareholders get in terms of an investment. Often shareholders or investors will negotiate for preferential kinds of rights that founders, because you're an engineer or you're a marketing person or you're a creative, you don't understand, and you just see, oh, $5 million, great, okay, but what you're actually giving away is very high.
They have voting rights, they have preferred stock, you have like
Yes.
normal shares.
Yes. At that point, I recommend, so when you're getting into the bigger numbers, like post-seed, you're just going for your, maybe seed, but certainly Series A, having some sort of advisor on your side as a founder, a lawyer or a coach or somebody, a director who is representing you. So especially if it's your first rodeo, your first time through it, you understand what the deal is that you're getting into. Okay.
So better call Paul.
Better call Paul, or better call a lawyer, or better call Saul, right? Exactly. In order to do that, because there are numerous cases. If you've been in the business for a while, we've all heard of cases where company sells for tens of millions of dollars and the founders get next to nothing, right? Because they get paid last, or they've gotten whittled down to 7 or 10% of the ownership of the company, and all of this work results in not very much of the payoff, right? It's a danger. That's how you protect yourself. Education and is probably the best thing, the best defense here. Not being greedy. Right?
Not being greedy.
Not being greedy.
Which is very difficult, because some people started a company in order to be a millionaire.
Right, which I dissuade them from doing. And certainly as running an accelerator or advising investors or when you see those companies, you just gong them out. You can tell right away that that's what the founders are looking for. And I say no, right away.
Okay, so what are the key success factors of startup founders besides having passion and vision?
So this has changed. Actually, it's a really good question because 5 years ago or 10 years ago, it would have been a different answer. Okay, the nature of venture investing now is such that one, there isn't as much money as there was.
No free money anymore.
There's no more easy money, right? Number one, so venture capital investment may not be the best thing for your company as well. So VCs have less cash and they're more selective and they're a little bit smarter and have a much higher threshold before they invest. And some companies don't really need to follow the venture path, which assumes that you start here and your valuation goes up really high because that's how VCs make their money.
Yeah,
that's
like
how they
go
operate.
big or go home.
Yeah, right. You have to do that because the nature of, remember, your investors, they're investing in you to make money, not because they love you. I mean, loving you helps and loving your idea helps, but they're writing the check because they see 5 or 10 or 20 or 100x return on the money that they're investing. And I think for all founders, you have to remember that this isn't charity. This isn't because good heart, good looks, good idea. It's because they want to make money.
Sure.
So that's the deal you're actually getting into here. So in some cases, companies don't need to get on that escalator, right? Being an SME might satisfy your needs as a founder or the problem that you're solving. So this comes back to your original question, what do founders need? And I think founders that I work with and I encourage, I don't invest currently, but that I encourage other people to invest in, they have to have a clear idea of the problem they are trying to solve, right? And certainly in Southeast Asia, those tend to be local problems. And you could build a good business solving farm to table or farm to store issues. There's a couple of companies here in Thailand that are doing that. There are a couple, there's an opportunity in Vietnam, there's opportunities in Indonesia and the Philippines to be doing that. Those don't have to be multi-million-dollar companies. And maybe they shouldn't be. So maybe smart investments or loans or venture debt, there's ways to do this that don't assume that you have to be on that hockey stick roller coaster, right? In order to have a successful company. And maybe you as the founder are happy running a company that grows at 10% and pays you a dividend and a salary and solves a problem, and you could be a happy person, solving a problem and making a decent living and helping other people and helping your family and supporting a family, and that's good enough. You don't have to be a zillionaire to be a winner. I mean, what's winning, right? In your head, what's winning? That's important to think about.
Okay, so like the founders need to know what answer their life goal as well, right? What is their life goal? Like they might not need to be the best, the largest in the world. They might not be the next Mark Zuckerberg or Sam Altman, but like they might want to live a happy life. And what does happy look like for you?
Yeah.
So maybe having an SME put less pressure on your shoulder.
Yeah.
And you could save your marriage or save other parts of your life as well, right?
I totally agree with that, and I'm a big supporter of that. I often question founders, like, do you really want to do this venture thing? Some companies, if they're hardware intensive or research intensive, or you're doing peptides or cancer treatments or manufacturing a new something,
Titanium bones,
yeah,
Oseo Labs.
exactly require a lot of investment. Okay, they have a financial requirement, but certain SaaS companies do too. If you have corporate clients and you need to scale globally very quickly, I mean, the nature of the company sometimes determines the capital requirements, but not all companies need to do that. And having an SME may be perfect for you, that you don't want all the strain and the stress and staying up at 2 a.m. every night for the next 7 years, right? It's okay, right? And let's face it, I mean, some of the multi-billionaires, the Bezoses and the Musks and the Zuckerbergs. I don't know, do you really want to be that? Is that who you really want to be? I mean, they're not particularly attractive people at this point, right? When they're trillionaires, right? I don't want to aspire to be like that. I certainly don't want my kids. Well, I want them to be successful. I don't want them to be like that either, right? So there's a balance there of building a company with what you want in your life as well. And I think that's a really big question that founders need to ask. And that wasn't so much the case a few years ago, right? It was like, oh yeah, let's get big, let's make the money, let's do this thing, we'll be number one in, t-shirts or something like that, yeah.
But actually, we talk a lot about like 5% or 5 to 10% success rate. But comparing to other industries, which is like attractive, like entertainment industry, for example, if you want to be an artist or you want to be a superstar, then that's less than 5% success rate as well, right?
Correct.
So I find it hypocrite a little bit like that, because of people feel that, oh, being a startup founder is difficult, that's why it's challenging, that's why I want to be in this. But actually in other attractive industries, the success rate is as low as
or lower.
founders.
I mean, if you want to be a singer or a movie star or something like that, the hit rate is much lower, right? But go for it if that's what you want to be, and that's who you are, and that's what success means to you. By all means, go for it and at least try it.
At least die trying.
Yeah, right. Or say, okay, I tried, but now it didn't work for me, or it isn't successful for me. I'll do something else. I think it's much more important to not regret having not tried, right?
Okay.
That I think as I get older, the things that I regret the most are the things that I didn't do and that I didn't try out. Not the things that I did and bumped my head or fell over, or, ooh, poor Paul. You get over those and you grow with those. But the opportunities that I didn't take, the doorways that I didn't walk through, that's what I regret the most.
Yeah, I do understand that, because I read The Power of Regret, and he said,
You can wait.
so most people, okay.
It's okay. Take a break.
I'll ask you a little bit more about the negotiation, maybe not for the founders, but like for professionals.
Sure.
Some of the audience most of the audience are professional workers, white collars, and they need to negotiate with their bosses for the salary and stuff. Okay, so I'll just continue with that first. So I can see that I heard about the power of regret, that most people regret about the things that they didn't take a plunge, that they fear that they will fail, so they avoid taking action, but eventually on their deathbed, they feel that, oh my God, I should have done that.
Yes. Yes. So I have a few answers to that question. Those are the things I regret, or the choices, the opportunities that I did not take. The
You
doors
already
that would
took
open.
a lot of opportunities, but there are a few
Of course. We all have that, right? We all have that. But I also try to remove the word should from my vocabulary.
Okay.
Should is a value judgment, number one. You should do this. That's me saying what you should be doing. Okay, that's my value and imposing it upon you. I should be doing this is just assuming that you're not doing it. I'm very conscious of the word and the power of that word, and I teach this to my kids, and I do it in coaching as well, is to try to eliminate that concept. Like, I am going to do this, or I am going to dress this way, or I am going to go to this place, or I am going to take this course, or I'm not. Right? Not you should, I should, they should, right? Try to eliminate that, because that's a real value statement, and I think it encourages regret in some ways. Yeah. Okay, and I'm sure people smarter than me can understand how the words that you use affect how your brain works. But if I catch myself saying should, and I still do it once or twice a day, but not nearly as much as I used to before, right?
Yeah. Okay, so one of the things that I think white collar people avoid doing that because it's risky is negotiating salary or negotiating a promotion.
Yeah.
What is your take on this?
All right. With the caveat that I'm not an expert on either of those things, okay, my general overall view of negotiations is understanding
The counterpart?
understanding both, what I want, and there's a range of what I want, what will make me happy or not, and then understanding what the other person is looking for as well. And not going into it as a win-lose situation, okay? It may not be a win-win situation either, but making sure that both people come out of it feeling good, okay? And it may not be that giant salary raise or that $6 million investment I'm looking for, but on the other hand, I don't come away feeling like, I'm on the short end of something. And again, if you're going to negotiate with your boss for a raise, you don't want them to feel pissed off at you or taken advantage of, right? They want to know that if they're investing more money in you, you're going to deliver things that they need, right? And so that would be how I'd set that up. Hey, I can take on more duties. I have been doing this, and that's helping the company. Therefore, I think I need the raise. Okay.
Do you think people are rational or irrational?
In general, or in negotiating?
In negotiation.
Personally, I find that it gets to the emotional stage very quickly, and trying to remove the emotions from it helps quite a bit, right? And understanding the dynamics of the situation helps quite a bit. But I think that emotions make it irrational, and we're humans, and of course we all respond emotionally to certain triggers or certain buttons. In negotiation, I try to step back from that as much as I can. I'm not great at it, but I try it. And that's what I encourage in my classes and in my coaching sessions, people to do, to really understand what the dynamic of the situation is, be intellectual about it, know how much or how little you're willing to go for, what the other person, what their needs and goals are, what you think they're accepting is, and go in with that kind of mindset. You can't control the other person, of course. There's no control over the other person, and they might not think the way that you do, or they may be greedy or selfish or bad people also, and not have you in mind at all. But assuming all things being equal, and that you're negotiating and talking to a fairly decent person, I think there's always a solution that can be had. I'm very optimistic about that.
Yeah, okay. So you need preparation, because information is the key to successful negotiation, right? And then controlling your emotions.
That's what I think. And knowing what you want, I mean, knowing what it is exactly that you want, and trying to understand what that looks like from the other person's point of view.
Probably not the ideal solution, but like what you cannot give away, right? What you cannot give up.
Well, it depends what kind of negotiating you're talking about, okay? For a raise, I don't think you're giving up anything, right?
Because like the worst case is like
where you are now, right?
Yeah.
Or you get fired, right? If you get fired for asking for a raise, you're obviously in the wrong company.
Right.
Right. So like, okay, it's a blessing in disguise. Different for a company. Someone wants to buy parts of the company, or you're negotiating for a distribution deal, or something like that. You need to know what you want, And I don't think losing or giving away stuff is a good mental framework. It's understanding what you want and what the minimum is that you're willing to negotiate for, right? Because giving up makes it look already in your head like I'm winning and losing, right?
Right. Okay.
And
So
I try to
that's a
avoid
different
that.
mindset.
Yeah. Know what you want. Know what the other person wants.
Sure. I'd like to ask for advice for general, like normal white collar people who are interested in being an entrepreneur because they might not be that satisfied with their jobs right now.
Right.
Do you think they should start a business or not, depending on what, and how do they get started?
So, really good question, because I'm sure that everybody in a white collar job or blue collar job, any kind of
Dream
job,
about
dreams
being
about
an
it,
entrepreneur.
right? Exactly, and we all see how people make money and riches because the press never covers the other 90%. You only see the
Right.
success stories, right? So my recommendation is for people who want to try something, it's kind of twofold. One, understand what that is and what that impulse is for you. Number one, and then number two is understand how much you're willing to risk to do it, and not only your risk, but your family and your partner and those kinds of things. Okay, I recommend people start a company on a small scale. Okay, try it at home first. Whether it's a distribution company or there's all sorts of companies you can start. Being an entrepreneur means you could be importing things from China and or from Korea and selling them into Thailand, like makeup products or something like that. That's being an entrepreneur, and you can make decent money, and you can still keep your day job doing that, right? On the other hand, if you want to provide clean water to 25% of the population of a country, that's a full-time job.
More than full-time job.
Right, right, exactly. And so I think you need to understand how committed you are to solving this problem and what the potential costs are to you and your family. Because there are costs, okay? And it makes it difficult. And maybe you are blessed with a partner who shares your goals or supports your goals or is willing to take the reduction in salary, the hits that this may entail. Doesn't always happen, right? But understand that before you go in. Talk it through with your partner and maybe your kids and maybe an investor or two, and see if this could be hard, and if it doesn't work, where is it going to lead us? Try to think about it that way first. I had a very good lawyer once who taught me a lot about negotiating contracts and joint ventures, and he said, when you negotiate a joint venture contract, you're looking at what failure looks like first. You're protecting against, you're saying, if this doesn't work, what's going to happen, right? And while I'm generally a very positive person, I think having that at least question of like, okay, what's the worst case scenario here? What's going to happen if it fails? What's it going to look like? And then am I willing to take those risks and take those steps?
Wow, okay, that's very intense.
Yeah,
Like,
but
you need to look at the worst case scenario and see if you can take it or not.
yeah, and then I mean, I really believe in that, and of course I didn't do it, and I probably don't do it when I try new things myself. But that's what I would recommend to somebody who is starting it out now, and just think, are you willing to do that? And if you're young and you don't have a family, and you have this great idea, go for it, right?
Yeah. Okay, so if you still have questions, you better call Paul. And how
Yes.
do they call you?
So I have a website, Asia Founder Coaching. I'm very active on LinkedIn. I'm very active on Instagram. I have social media. But I think the best way to get me is through my website or LinkedIn currently. That's where I'm most visible.
Sure. So if you like this type of content, please click like and subscribe.
Absolutely.
And that will make our day. So today, thank you so much, Paul, for sharing your experience, struggles, and tips and tricks for our audience today.
My pleasure, Em. Thank you for having me.
Thank you.
I hope it helps somebody, yeah?
Yeah.
Okay?
Definitely.
All right.
At least it helps me.
Good. Okay, I'm glad. And you too. I hope it helps you too.